What's up, risk managers? My name is Nasdaq Anonymous, and I'm addicted to the NQ. And boy, is she one hell of a drug. And welcome to today's NA meeting, where we'll discuss the economic data for the week, the day's technical analysis, the trading opportunities that we took on today's stream, and build a game plan for tomorrow's price action. And if you haven't done so already, you can show your support by subscribing to the channel. And with that said, let's jump into the charts now. This is tomorrow's data. Be mindful that all times are in Central Time. And we have a light block of news scheduled for tomorrow, so let's jump into it. At 7:30, we have jobless claims. At 9:30, we have some energy news. At 10:30 and 12 o'clock, we have the 4-week bill auction and the 30-year bond auction. And at 1 o'clock, we have Fed daily speaking. Now, it's never recommended to trade during volatile price action, but if you choose to trade during these times, then understand you're playing a game of chance with your trading account. And now that we know what to expect, let's jump into the charts and create a game plan for tomorrow's price action. This is the block of price action that we traded during today's stream, and today was definitely a range day. And just when you thought that the bears were done, after we got this initial drop down, continuing that drop into the pre-market, creating a two-legged pullback into support, and the bulls pushing price higher into a previous area of resistance. Now, it's not hard to believe that the bulls are running out of steam up here. We've had a massive bull run with little to no pullback. And remember, this is the same area that actually started all this bearishness. This is the same area where the bears took full control of this market and we got that big leg down. And here we are again. But here's the thing. I do believe that we're going to get a move lower, possibly in the pre-market going into tomorrow's session. But I want to see how the bulls react when price trades into this area in a range between 996 and 933. I believe that there's a lot of big lot bulls that are sitting here at this area and they're waiting for a pullback. However, just because price trades into this area, it doesn't mean that we'll actually get that pullback. Now that we're leaving this area of supply, I believe that the bears are going to come down with a very strong force coming down, because you can see that all the EMAs are sitting above price and the 200 EMA is the only thing that's holding this market up. And if we get a strong close right below this 200 EMA, I believe that the bears are going to take full advantage of this and they're going to come back with the force up until the bulls show that they want it and protect this area. Now, we have been bullish for the past 4 days, and it wouldn't be a surprise to anyone if the bulls come back in and take this price going higher. But how will the bulls be able to achieve that? Well, if the bulls really want to rotate price higher, they're going to have to actually trade above this area of supply and really blast through it. The bulls are really going to need to trade price higher with some authority because, again, this area is higher time frame supply. And I do expect the bears to continue to protect this area and make an attempt to push price down. And with that said, let's jump into an ES chart. This is an ES chart, and this is the block of price action that we traded during today's stream. And just like the NQ price, after we got that two-legged pullback into support, trading price higher, getting rejected at this supply area, and the bears took it down until the end of the session. And also like the NQ, I believe that there's going to be some big lot bulls waiting in this area between 170 and 156, looking to buy a pullback to retest some prior structure. Now, we just had a couple of Fed speakers today, and we had Fed Collins speaking, which is actually a voting member. And just like the rest of the Fed, they're showing their solidarity by stating the same thing. They need more confidence in the data. And currently, the data is not showing them that. Let's actually look at some of her statements now. Here are the statement that Fed Speaker Collins made during her meeting. It's too soon to tell just how restrictive policy is. Holding rates steady for longer will slow the economy. The current monetary policy should slow the economy. She expects some factors underpinning economic resilience will wane. A very strong job market has bolstered consumer spending. She is optimistic that the Fed can reach their 2% inflation goal in a reasonable time frame. The economy is robust. The job market is coming into better balance. Fed policy is positioned for the current outlook, and monetary policy is moderately restrictive. Now, reading these statements, it appears that she's focused on the job market, and we have continuous jobless claims being released tomorrow. So it's going to be interesting how the market reacts to these job numbers. And with that said, let's jump back into the charts. Now, here are the 3 clues that I took away from today's price action. Today, we had a two-legged pullback into support during the pre-market. Once the session opened, the bulls bought the first test of that support area, creating a V bottom, trading into a prior area of resistance. And since then, price has rejected from supply and is currently heading lower into the close. Right now, if the bulls want to be successful, the bulls are going to have to protect this area. For the most part, the bulls are really going to have to protect this area. If the bears do manage to push price down, this will be the line in the sand for the bulls to protect. If the bulls lose this area, I believe that this will be the start of the market trending downward. So the bulls are going to really have to show their authority to continue their control of this market. And before we end today's NA meeting, I really want to emphasize the importance of having a trade plan and writing in your trade journal. Today off stream, to plan out this trade, catching the exact bottom and getting out towards the top of this move and allowing my trade plan to play out. Moving forward, before we take a trade, we're going to document it in our journal and we're going to document the results once it comes to an end. I've found in my experience that actually documenting and writing in your trading journal before, during, and after a trade really helps you identify the flaws in your trades and you can learn from them. Being able to go back and reference old trades will definitely be beneficial to the ones that you take in the future. And with that said, that's all I have. And if you're enjoying these breakdowns and want insight on trading the Nasdaq and ES intraday, then subscribe to the channel and join our live stream where me and my trading partner provides intraday analysis in real time. Our current goal is building a community. And if you're tired of missing the best trades in the Nasdaq and ES intraday, then join the live stream, join the Discord, join the risk managers in the chat, and we appreciate your support as we grow. As we wrap up, remember the risk manager's creed. Trading involves risk and demands careful analysis and capital preservation. And we can do that by practicing sound risk management. Every trade tells a story. Make sure you write that story in your trading journal because our psychology is all over these charts. And as always, my name is Nasdaq Anonymous, and I'm addicted to the NQ. Stay green out there. Peace.